With coronavirus concerns in the U.S., turbulence is setting in on Wall Street. This after years of prosperity. So how do you prepare for these wild ups and downs? Valley News Live's Rachel DePompa has your smart money moves to make if you're keeping an eye on your nest egg.
They say what goes up must come down. And historically, that's been true of the stock market. Wall Street's been on an upswing for quite some time, but coronavirus fears and fretting headlines are now the norm. Experts say don't panic.
I think it's really important not to think as much about the stock market and its performance, but to think about your own goals.
In most cases, your goals are still the same, which is why Ariel O'Shea says when it comes to the money you've invested for your nest egg, don't start worrying.
You don't want to be a scared investor, but you do need to know that, if you're a long-term investor, there are going to be periods of market volatility. It's unavoidable.
O'Shea is a personal finance expert with a financial website, NerdWallet. She says make sure you're always prepared to weather a market storm.
Just have the thought that, it's the long haul. It's
Right.
not immediate.
And set yourself up for success, right? So you want to make sure that you're in a portfolio that is aligned with your risk tolerance, which means you're not taking more risk than you can handle. You're not going to set yourself up to panic sell.
Investing is really for long-term goals, retirement. So it's money you won't need anytime soon. So check in on the money you will need, that emergency fund.
An emergency fund will let you cover bills in case you lose your job. It will also help you avoid tapping your investments, right? Because you have this liquid cash. And so having an emergency fund just makes you feel more secure. It allows you to sleep better at night. And if it's going to make sense for you to have a bigger emergency fund, if you're going to feel more comfortable with a bigger emergency fund, then start building that up.
And if you feel like you might panic, put your money in someone else's hands. A financial advisor.
They're really doing the day-to-day watching. They're really, making sure that you're invested in a way that meets your needs and you don't have to worry about those little details.
When someone hears financial advisors, they sometimes might go, can I afford that?
Exactly. And yes, you can.
She says there are now financial advisors for just about every budget, especially these days with robo-advisors, online advisors that use computer algorithms and advanced software to build and manage your investment portfolio.
Some of them are free. Some of them you will pay 0.25% of your balance. It gets taken right out of your investments. So it's a very small amount of money per year, depending on your account size. But you can afford it because if you have investments, you can afford that little tiny bit to pay to a robo-advisor.
In the end, highs and lows are normal. O'Shea says don't freak out or stress out. You have to remember your money is in that 401k or IRA for one reason: retirement. You shouldn't need it anytime soon.
Stick around where you can find free workouts from the comfort of your home.